Hello, everyone, and welcome to Chartwise Women with Erin, Swenlin, and Mary Ellen McGonagle. Welcome to our Thursday, June 3rd, 2021 show. Mary Ellen and I are here to educate, engage, and most importantly, we want to empower you to take control of your investments and make your portfolio as beautiful as we possibly can. How are you doing today, Mary Ellen?
Very good. Yes, had a nice long weekend last weekend. Really was able to hit the restart button, made it to the beach for a day and visited with friends. So, yeah.
Yes, it was great to finally get out last weekend. I have to say,
Mm.
hit that bowling alley. That was really fun.
It's funny. Yeah, it all feels so heightened and new. Uh,
Right.
so
I think
very,
we all appreciate everything just a little bit more now that we're getting out and about.
I would agree. Yes, we're not taking it for granted for now.
And we're almost free here in California.
Yep,
June
pretty
15th.
close. Yep, we're getting there.
All right, well, let's move on to the show. Today, we're going to talk about high yield stocks and looking at some of those opportunities that are out there. I mean, high yield stocks are great to have anyway. That means they're paying good sized dividends in relation to their price, their stock price. But a lot of times, sometimes these high yield stocks may be a little bit dull in their movement, their stock movement. But really, this is one of those pieces of the puzzle that you do want to consider when you're getting into the stock market and you want to have those dividends, you want to have those stocks that are going to pay you regardless, at least in some way, shape, or form.
Mhm.
You deal with high yield stocks in your work, right?
I do, and it's not particularly on purpose. It is a byproduct. A lot of the industry groups that are working right now do offer stocks that have higher yields. And certainly, we're going to be covering those industry groups and telling you how you can get in front of these higher yielding names. Also, they do tend to act almost as a buffer. We're in a period where the markets are struggling to really determine which direction we are going to be going. A lot of it has to do with interest rates and inflation. We're just in this period of uncertainty. The markets do not like uncertainty. So gravitating towards some of these higher yielding stocks could be a wonderful way to diversify and buffer yourself.
Absolutely. And this brings us right into our wisdom of the week. And mine is the first one. So I like to take advantage of these high yield stocks when they get hot. And we're going to talk a little bit about the sectors where they tend to be more prevalent. But those sectors right now are certainly looking good. So there are a lot of stocks out there that are interesting us. How about
Mhm.
your wisdom of the week?
Yes, so I mentioned briefly the concept of inflation. We are in a very relatively high inflationary period as a high demand for low supply of goods due to supply constraints and so forth. And there was a study, Evercore, they are a research firm on Wall Street, and they did put out word that high yielding stocks do have a historical precedent. They perform well during periods of increasing inflation. And we're certainly in that period now. So it makes a lot of sense to get your arms around these stocks and how you can get in front of them.
Absolutely. That is excellent. So let's go ahead and we're going to talk about some of these high yield sectors that we like. Typically, Mary Ellen, I know I see a lot of those high yield stocks in the energy sector,
Mm-hmm.
real estate. I know I found a few in the financial sector that look like they're doing well. And I think before the show, you had mentioned utilities as well.
Yes, in fact, we are seeing life. It's interesting because when you look at the recent relative outperformance, you will see these normally defensive areas that are coming into play. I'm going to go ahead and share my screen.
Mhm.
And certainly we can take a look very quickly here at energy because that's something we've been mentioning quite a bit. This is XLE, that is that energy ETF, and we can see that it is breaking out this week. Lots of news. I covered this last weekend in my MEM Edge report. There was an OPEC meeting earlier this week, and that's the oil producing countries come together and they decide on production output. And that in turn is going to impact the price of oil. So let's, Erin, I know you have a couple of ways to look at this as well, but I'm sharing with you that Brent crude oil pricing, and it is up at 71. If I sound giddy, it's because I have been on top of these energy stocks going back here. I added several energy stocks to my MEM Edge report back here in November, all about that recovery play, people, the increased usage of oil. And the price back then was at 45. And I was just really hoping we could see 50. That's that break even point for these oil companies to begin making profits. And to see it up here is just amazing. One of the names on my list is up 118% now from this period. And so it's been fun. It's just been really great to stay on top of this and watch. But Erin, I know you have some energy or oil related charts as well.
Yes, absolutely. So here's my energy chart, since we were looking at those sectors. And you pointed out that we're getting that nice breakout right now on XLE. But even under the surface, which is what we do at Decision Point, we look at participation, and you can see right now that 100% of the energy stocks in XLE, 100% have price above their 20-day EMA. And then you dive down further, and I know this is something that you pay close attention to, Mary Ellen, price above the 50-day moving averages.
Absolutely.
Look at right now we have almost 96% of the stocks of XLE above their 50-day exponential moving average. And I know it's quite high as well, again, above the simple moving average as well. And those are the kind of stocks that are showing that strength that we really want to see. And you can see all the volume that has just been coming in on XLE. And then if you look at the oil chart, and I have it right up here, this is what West Texas crude, the light crude oil, and I follow this one, and we use USO, the US Oil Fund ETF, for our signals. And right now, this one has that bullish ascending triangle. We were expecting the upside breakout, and of course we did get that right alongside a new crossover buy signal for the PMO, which is your momentum indicator, at least the one we use. And then, of course, USO over this year, is starting to really outperform. And when you look at the rising wedge that we had here, that is a bearish pattern. And we got a bullish breakout from that bearish pattern. For me, anytime I see a bullish breakout from a bearish chart pattern, I find that to be especially bullish. So I certainly think that crude oil is going to continue higher. And of course, that's going to mean some great opportunities in that energy sector.
Oh, yeah. The growth prospects, analysts are continuing to revise higher their earnings and their estimates because of this elevated price of oil that Goldman Sachs and others are anticipating will make it up to $80. And it's all about the summer months, increased travel, increased usage of oil. So, yeah, lots of good news there.
Absolutely. I'm liking it. So another sector, I know there are a couple sectors, but one of the other ones that is really killing it right now would be real estate.
Yeah. And so I actually have, if you want to put it up on if you look at the week to date this week, as far as those sectors that are outperforming, and it's all the higher yielding areas, all the top 5 sectors this week. So
absolutely. And you can see real estate. Here's another bearish chart pattern, breakout to the upside. And again, I find these bullish breakouts from bearish patterns to be especially bullish. One of the problems you could say is that we are looking at very overbought readings, and that was really the same thing on that energy chart. But that gives you a very strong foundation to get some follow through. So we like to see that to some degree. And one thing that you should keep in mind when we do get these really overbought readings, if you're in a really nice bull move, those conditions can persist. They can stay for quite some time. So just seeing that everything's overbought, while that is a concern usually, I have to say that in this case, I think we're just going to see those overbought conditions just continue here in real estate, and lots of opportunities there as well.
Yeah, that's all about the reopening trade, and a lot of the better looking names among the real estate area with these REITs is the some of these malls, also apartments, office buildings. A lot of them are related to this, again, reopening, and mortgage related REITs are really super high yielding. So I hope we can maybe get into some of those names.
Absolutely. So let me look really quickly here. We were talking about the 1 week, and these are the sectors that, I'm sorry, the industry groups you were mentioning. So I thought I would put those up.
Perfect. Yes. And you can see, well, I was doing it by sector, but this is equally relevant here as far as what we're seeing here in the REIT area. So indeed, lots of interesting, yeah, so 1 week, and there it is right up there at the top, energy, real estate. A lot of bank stocks are offering very healthy yields, utilities and staples. These are your yielders for the most part.
Absolutely. That's where you're going to find most of those names in that high yield dividend area. All right, well, we're going to go to a quick commercial, and then we're going to come back and talk about how we find those high yield stocks when we want to find them. A lot of times, as you were saying, it's not necessarily something we do on purpose when we're looking at our stock picks, but it's also, you can actually focus in on that if you'd like. But we're going to go to break, and we will be right back with some of our ideas of how to find these high yielders, and then of course show you those stocks that we like. Okay, we are back from our break. We're talking about high yield stock opportunities right now. And we discussed what high yield sectors we like at this point, are the ones where you're going to find the most opportunities. But now we're going to talk about, oh, how do we find those opportunities? So I actually, everybody knows me. I use the scan engine. That's just something that I do for all of my stock picks. And so I was going to just show very quickly how you can use a scan to come up with those high yield stocks. And in this case, I did actually have looking particularly in the energy and real estate sectors. So I've commented that out, but I'm going to add it back in there. So we can look for a high yield greater than, in this case, let's just go for it, Mary Ellen. Let's see.
Oh, please. Yeah.
Over 5. And then I do add this at the end, which is getting positive earnings as well. Because if you have a stock that maybe is, got very, very low earnings per share, you have to be a little careful, because you don't know if that stock price is going to hold up with that dividend, so you get those high yields. So I'm going to actually take this out, though, because we know that real estate, and since we're looking at real estate, there are a lot of them that end up in there that do have negative earnings. But as you were saying before the show, it's not something that you necessarily have to be scared of.
Yes, it is easy, certainly when you know how to do that, to put together, and if you can take a
Certainly.
screenshot of this if you'd like.
Yeah,
But
exactly. Or feel free to email me at erin@decisionpoint.com and I can send you the scan code. And then all you'd have to do would be to copy and paste it into the scan engine right here on that workbench. So let's go ahead and see what we do come up with. I haven't run this scan today, so I have no idea how many stocks we're going to find. Right now there's 40. And you can see, of course, I did group it mainly by energy and real estate since that's what we've been concentrating on today. So there are plenty of opportunities and all of these have yields of 5% or more. Pipelines, you're going to see a lot of these pipeline.
Yes. And since you are speaking of that, it is worth noting that those LPs are limited partnerships.
Yes.
They are treated very differently on a tax basis. So you'll want to be aware of that before you dive in to an LP. But
absolutely. Yeah, you have to file a Schedule K1. I found that. I found out about that a couple of years ago.
Sure.
It's like, what is this form?
Right, exactly.
TurboTax handles it just fine, I have to say.
Sure. And I can tell you that I ran a very similar screen. I was looking for stocks that had 3% yield or higher, actually stocks or ETFs, and they had to be each above their simple moving averages. And it came up with 331 stocks yielding over 3% in bullish positions. So it can be a lot. This screen is narrowing it down probably because of that high yield constraint. But then from here, yeah, so you're going to share some names, but certainly that scooter rating can help you just get to those really attractive charts very quickly. SCTR was one of your column headings, and that can be really helpful to drill down.
Absolutely. Did you want to share your screen and show us how you find some of these high yield stocks you just mentioned that you got?
Yes.
100.
Right, I did. Well, actually, it's I don't have the scan up at this time. I apologize, but I did then. It was using ETFs or stocks as well as mutual funds, so hence the expansive list. But then from there, I do like to sort it by that SCTR rating. But yeah, let's talk about Exxon. This is a stock that was on my suggested holdings list for my MEM Edge report. I did remove it or replace it because they had an event where two of their board members were replaced, and it was because an outside firm came in and said that they did not like the way Exxon was planning for their carbon emissions, as well as where they saw Exxon's money flowing to. They wanted changes to take place. So they did come in, upend the board. And so for my work, Exxon, there were better names that
what names do you like? Let's call these up.
Yeah, so my favorite, and it has been, is DVN. This is one of the names I picked up last November, and really some great characteristics happening with this stock. Not only are they on track for high growth, they've been paying down their debt. The company in February announced a variable dividend, very unusual, but a couple of other firms have added on and done the same thing. And this variable dividend gives the company, Devon, flexibility to increase that payout to a higher amount, up to as much as 10%, because Devon is doing well. The price of oil is staying high. So hence the ability for the company to provide this extra added yield. Right now it's 1.4% is what I would say guaranteed as your yield, but this variable dividend has made the stock super attractive. And you can see it is among the larger names, one of the better performers this week, up about 17%, but also still has upside. I think you can speak to that as well with your PMO.
Oh, absolutely. I mean, the only thing you might worry about would be this overbought RSI. But as I was mentioning earlier, when you have a strong stock, it can remain in that overbought territory for quite some time. And this one looks absolutely fantastic. And it's very clear from the relative performance that not only is the group doing well here, but we're also seeing those great moves here on Devon against the S&P
You
and
bet.
against its industry group.
And
Excellent.
something else worth noting, because I, as mentioned, did pick this stock up last November, it has stayed on my MEM Edge report. When you are seeing a rotation into newer groups, oftentimes that stock that is first out of the gate will go on to be your leadership name. That's something over the years I've seen again and again. And in this case, it has proven itself.
Excellent. All right, well, we still have time for more of our favorite high yield stocks. Let's go ahead and we're going to take a look at some of those. I'm going to let you share your screen. I've had the screen way too long.
Yeah, I was going to say it's my turn.
Yes, it is your turn.
I am going to share with you a stock that is not energy. Actually, I'm going to deviate just a little bit and share with you a stock that I think you are just going to like. I think you're going to like this one. It's a small cap name, Israeli-based telecommunications stock, and it's Gilat Satellite, GILT. And let's just go ahead here. This is something I wanted to share with you. You can go ahead and click that full quote, update it, and among other information, it'll also provide you with that yield. So GILT.
Oh, let me just mention one other thing. If you go down there in the workbench, you can also put in what we call events, and that would be an overlay. So where you have your simple moving averages, if you click there, there's one called events right there. Hit that and update, and it's going to show you, you can see underneath, it shows you what dividend was paid and when.
Gosh darn it, you're teaching me something new today. I love it. Okay. So we can see that it has been consistent. When I ran that screen originally, there were some stocks that were up over 10%, but then they had no answer for current. And that's because during the pandemic, particularly smaller companies, some of them discontinued offering their yields. But of course, GILT, we can see it did continue. Nice increase here, and currently actually, yeah, nice 9.6% yield. Look at this chart. We can see it's just now turning positive, breaking back above these shorter term simple moving averages. So looking quite interesting there. Another concept that I did want to share with you is the concept of what are called closed-end funds. These are funds that actually come to market similar to an IPO. And then once you get into this closed-end fund, there are no abilities for new people to come in, but they do offer really high yields. This is Guggenheim Strategic Opportunities, GOF is the ticker, nice 10% yielder. So a lot of the higher yielding ones are these closed-end funds. They do fluctuate. You can see a big dip here, depending on what industry they focus on, if there is a drop in that industry. But most investors do get in, they stay in it for the long term. It's primarily to take advantage of those higher yields. Another one that we can take a quick look at is PIMCO. Many of you know them as bond fund managers. They're based out here on the West Coast. So here's what's called the PIMCO Dynamic Income Fund, PDI, another closed-end fund, offers a nice 9.1% yield. So something to consider adding to your portfolio because, again, they do offer those nice higher yields.
Absolutely. Really like all of those names for sure. Let me see. Let's see. Actually, it looks like we're getting near the end here. Let's go ahead and just move right in, unless you had a couple of other names. I know one of the names that I've had on my list and actually in my portfolio is DCP, which I think is a pretty nice looking, it's a pipeline stock. It's got a pretty good return here. Let's see if I can get back to the screen here. Yeah, there we go. So you can see really nice high yield here. It's got positive earnings at this point. And it's just been a steady mover to the upside, as you were pointing out, since these since that November timeframe, or even back in September. This one has been off and on my list of diamonds. And recently it came back up with that breakout. So I don't think it's too late really to get involved in some of these stocks, particularly in energy.
Absolutely. Yeah, that is a very nice looking chart.
And
Very
then I
good.
have one other name, and that's UMI, and that is an ETF. And it's really a pipeline ETF. It's rather new. Obviously, there's not a whole lot of data on it, but I had read about this energy income fund, and it really has some great opportunities. The yield, you can't see it on,
Yeah, I
but
will say it is just be aware it does not trade very actively when you see these kind of gaps. That's a 1 hour price chart
yes,
on the stock. So just keeping that in mind, just pointing that out.
absolutely. And that's
All right.
some of the issues with those brand new ones. But let's go ahead. We're going to get right on into, yeah,
Yeah,
that
that
happened.
happened. Yeah, this one does tie in very current as far as the markets. It did happen last week over in the UK. The police raided what they suspected was a cannabis factory, and it was primarily because the UK and elsewhere they have these drones that can pick up on considerable heat when a lot of electricity is being used. Also, they noted that people were coming in and out of this potential cannabis factory at all hours and all times of the day. But in actuality, it was a cryptocurrency mining operation. And these operations do use tons of energy. They're mining. They have their systems are creating these cryptocurrencies. So the similarities were there, and they burst in ready to arrest people, but not so. So from here, what we can do is take a look at some stocks. First up, we're looking at Duke Energy. Actually, let's look at FE. That's a pure utility electric stock. I talked about how much electricity these companies use. Nice 4% yielder, breaking out of a very lengthy base, FE. And from here, Erin, I know you have some cannabis stocks. This is an area you've been bullish on
Yes,
that
you
you
have
wanted
no
to share.
idea. I have so many stocks, but I'm going to just concentrate real quickly on that alternative harvest ETF, which I talked about. I've been talking about in diamonds for a while, and I mentioned a few names on the pitch when we were on it before. But this is the marijuana, if you will, ETF. And as I've been telling a lot of people, there is legislation that's about ready to go before Congress that will legalize medical marijuana and marijuana in general. They're going to allow the VA to prescribe medical marijuana. It'll be decriminalized. It will be taken off Schedule 1. All of this is going to be in front of Congress very soon. And guess what? These names are going to do very well. And technically, I don't normally trade on news anyway, but technically the chart looks just fantastic with that bullish falling wedge and the nice breakout here. So I'm really liking these cannabis stocks for sure.
Very good. And even Bitcoin, they're having a good week this week. So
Absolutely. I have it really quick. I know we have like 30 seconds, but I will show my Bitcoin chart. And there we go. We can see that it is starting to rally, but I don't know. I'm looking at this pennant formation, and but we do have momentum on its side. So
more work,
you
a
know,
little more work.
Bitcoin.
Very good.
All right. Well, that does it for us today on Chartwise Women. We want to wish you happy trading and, of course, a great weekend.
And we'll see you next week.
Absolutely.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.